Action.
This is the story of MFS. The story of MFS begins in Boston.
This is really where not only the mutual fund started, but active management started, traditional active management. When you look at some of the storied companies here in Boston and just the culture of investment management here in Boston, it is unique.
Second only to New York City, Boston was the heart of commerce in the 1800s. It's here that public trusteeship got its start as a fiduciary service for sea captains.
They needed somebody whom they could trust to take care of that wealth while they were out doing the next voyage.
In Massachusetts, trustees could invest their clients' money as long as they did it prudently. The roaring 1920s. Wall Street was a world of speculation and a wealth-building tool for the few. Small investors could pool their capital to access greater investment power. But investing in these closed-end funds came with risks. Managers of closed-end funds refused to disclose their holdings, making it nearly impossible to know their worth. If a small investor wanted to sell their shares, they'd have to find other investors to buy them, making them hard to sell, especially if conditions soured. In short, they were very risky for the middle-class investor. There had to be a better way.
And this fellow named Loeffler came out of the Midwest with an idea. He is the guy who inspired various people around Boston to be excited about the opportunities for smaller investors.
A passionate salesman, Edward Loeffler recognized that Boston trusteeship, once reserved for wealthy sea captains, could be packaged and sold coast to coast as an open-end investment company. From selling pots and pans door to door to later selling securities that could help people get ahead financially, Loeffler understood ordinary Americans and what they needed. His solution, an open-end fund that allowed anyone to invest in a collection of well-established companies. It would be professionally managed, affordable, and diversified. His big idea, and one of the most important developments in the industry, the on-demand redemption feature. The fund would redeem customer shares at any time, meaning liquidity whenever investors needed it. Active management, income, and protection for $250. This was the launch of MFS's first fund and the first open-end mutual fund in the U.S., Massachusetts Investors Trust.
It was the democratization of investing for individuals who, prior to that, didn't really have the ability to invest in markets.
The decision was made, we were not going to go direct to investor, but we would distribute our products and mutual funds through intermediaries. The thought being is that most clients would value from having somebody in between that can analyze what made sense for them, make recommendations, and be their guide.
With financial professionals to advise them, everyday investors could get the transparency and liquidity they needed via Mass Investors Trust. Every security owned, the amount of shares and their value, all captured in the Mass Investors Trust ledger.
I remember looking at that and seeing it in its yellowed pages and the handwritten stocks and the positions and just thinking, wow.
I definitely looked at it the first time that I sort of came to Boston. And again, it's this real moment of inflection of understanding this kind of standing on shoulders of giants.
Now, average people from across the U.S. could go from earners to owners.
The foundation of owning a diversified collection of companies to serve the average investor is unchanged, and the ledger is a physical reminder of that on a daily basis.
As stock prices soared from 1924 to 1929, MFS rose above the market frenzy and short-term thinking of so many managers. It was the right call then, as it is today.
Everybody was investing and everybody was making money, and one day the music stopped.
October 29th, 1929, the Great Crash. The value of closed-end funds cratered, ushering in the Great Depression and the suffering of families across the U.S. and in much of the world. As an active manager, MFS's trustees strategically altered MIT's holdings to weather the storm ahead. The firm was tested, but it was in tough times that MFS could really prove its value.
That gives you the opportunity to position yourself versus the competition in the markets and create long-term alpha generation.
Investors were still shaken, the industry badly bruised. MFS needed to restore trust. A young lawyer from Maine had joined its team of trustees. Merrill Griswold was an outspoken advocate for putting clients first. He knew what investors needed to feel confident, providing them with pamphlets, newspaper editorials, and what he called Goldfish Bowl reports detailing MIT's sales charges, financial performance, and portfolio changes. The reporting was unprecedented, a level of transparency that was unthinkable to most investment managers. After the crash, investors needed something more than reports. They needed to trust the process. So in 1932, Griswold helped create MFS's in-house research department to build deep knowledge of its portfolio securities, another industry first.
The fact that we worked at a place that started that focus is something that we've all been proud of and carries through to this day.
MFS hired Dwight Robinson to run the operation. He was the first research director in the industry. He pioneered fundamental research with practices like statistical analysis to help break investor inertia. It worked. The firm not only survived, it thrived. The assets in its trust took off.
That darn thing had grown like 5 times in the Depression, which is unbelievable when you think about it. But again, validation that it was doing its job.
We're not going to invest in companies we don't know and that we haven't met management. We really need to understand their business deeply instead of relying on anybody else's research. I mean, that's who we are today.
No one else has that legacy. We created this virtuous cycle that makes the world a better place.
As the 1930s unfolded, MFS had become a shining symbol of a new era of investing. But another storm of change was on the horizon, and so was the opportunity to grow from it.